Right now, as you watch this, a computer in a nondescript building in Mahwah, New Jersey, just made a decision. In less than 30 microseconds, it moved more money than you'll earn in a lifetime. You've been told the stock market is a triumph of modern democracy, a place where anyone with a smartphone can own a piece of the future. But what if I told you that's a lie? What if the market isn't a marketplace at all, but a 400-year-old software program designed by pirates and privateers to ensure the house never loses? Today, we aren't talking about RSI, candles, or buying the dip. We are going deep into the bloodline of the NYSE, to the names, the secret pacts, and the dates that YouTube gurus are too afraid to touch. Welcome to the invisible architecture. Most people think the market started on Wall Street. They're wrong. It started in a smoke-filled tavern in Amsterdam on March 20th, 1602. The Dutch East India Company, VOC, didn't just want to trade spices, they wanted a monopoly on the world. They created something never seen before: permanent capital. Here's the part they don't teach you in finance school. The VOC was given the power to execute people, wage war, and seize land. On August 31st, 1602, the first shares were sold. But there was a catch. Investors weren't allowed to get their money back. Ever. You could only sell your receipt to someone else. The market was invented not to build businesses, but to fund a private army. Your stocks today? They are just 400-year-old war bonds with a digital facelift. Fast forward to New York, May 17th, 1792. 24 brokers met under a single buttonwood tree at 68 Wall Street. In America, we're taught this was a glorious moment of organization. But if you read the actual Buttonwood Agreement, it wasn't a free market treaty. It was a secret cartel pact. Those 24 men explicitly agreed to only trade with each other and to keep commissions fixed at 0.25%. If you weren't in the club, you were the liquidity, which is a polite Wall Street word for the victim. This agreement didn't just form the NYSE, it established the spread. Even today, with your zero-commission apps, that 1792 club mentality exists in payment for order flow. You aren't the customer. You are the product being sold to the 21st century version of those 24 men. Now, look at the modern shadow. In 2010, a company called Spread Networks spent $300 million to drill a literal hole through the Allegheny Mountains. Why? To lay a fiber optic cable from Chicago to New Jersey that was just 3 milliseconds faster than the existing one. But even that is now obsolete. Today, the big players use microwave towers, the same technology used for World War II radar. They aren't looking at value or earnings. They are using pure physics to front-run your buy order before it even hits the exchange. The market isn't a battle of brains. It's a battle of the speed of light. If you are trading from your couch, you are playing a game where the opponent sees your cards 500 times before you even flip them over. From the pirate ships of 1602 to the microwave towers of 2026, the game hasn't changed. Only the tools have. The dates, 1602, 1792, 2010, they aren't just history. They are the milestones of a system designed to concentrate wealth, not distribute it. But the shock isn't that the system is rigged. The shock is that it's working exactly as it was designed to 400 years ago. The house doesn't just win. The house owns the air the game is played in. So, the next time you see a green candle on your screen, ask yourself, am I the hunter, or am I just the spice being traded on the ship? History doesn't repeat, but it sure does rhyme. If you want to know how to actually survive this machine, you have to stop looking at the price and start looking at the plumbing. But that is a story for the next video. The best way to rob a bank is to own one. William Crawford.